It's Dami Adelusola here again. Today we'll be talking about one of the most underrated investments in Dubai. Now, I'd like to start with one question. If you had 3 million dirhams to invest in Dubai today, would you invest in a villa, an apartment, or a plot? I know that's a no-brainer. Most investors will probably choose an apartment, but I think you're overlooking something. Plots. Plots are actually one of the most underrated investments in Dubai. Here are 6 misconceptions about investing in plots. 1, you need a lot of money to invest in plots. You don't need a lot of capital to invest in plots. Except you're buying in super premium locations, you can take good advantage of developing locations around. 2, investing in plots requires special knowledge. You don't need to be an expert to be able to invest in plots. You just have to understand the fundamentals and the basics of real estate investing. 3, all investments are good investments. Not all plots are good investments. You have to understand the location, accessibility, connectivity, development or infrastructure. Those are the metrics you need to understand to determine if a plot is a good investment. 4, land investment is risky. Every investment carries a risk. Once you understand the fundamentals, you understand the location, the development coming up in the future, the basic metrics of investing, you're good. Land investment carries low risk as compared to the stock market or the crypto market. 5, all the best properties are already owned. That's false. There are a lot of plots deals that are still coming up in the market. Very good deals, very good payment plan, very good structures. You just have to have the right strategy. Investing in plots means you have to be hands-on. There's not so much you have to do when buying a plot. You just have to have the right strategy as well. It's either you're buying to hold, to keep on the long run, you sell for a premium, you buy to develop and make your money. It might seem a bit cumbersome to develop. However, as an investor, if you know you can't go through the hassle of developing, I would suggest you get a property manager to handle all of that for you. According to Arabian Business, experts describe land as the ultimate asset class. In 2025 alone, over 4,446 transactions were done in UAE, with a total transaction amount of 128 billion dirhams in just 2025. Buying a home is fundamentally different from buying a plot because buying a plot shapes the future of the city. Here are reasons why I believe plots are fully underrated, especially in Dubai. 1 is scarcity. You can't make more plots. Once the plot in the particular location is already saturated, there's no way you can make more plots. You can always make more elevation when it comes to apartments or villas. Now, 2 is flexibility. Plot gives you that flexibility when it comes to design. You can build residential, you can build commercial, or you can build industrials. It gives you that flexibility. Another one here is control. You can fully control what you want to build on the land itself. There's what we call development value. Every time there's a new infrastructure coming around, the development value in that location increases. Another one here is better long-term appreciation. Plot actually gives you one of the highest returns in terms of premiums. The last one here is low maintenance. You don't need to do so much when you have a plot. There's no way we can talk about the pros of buying a plot without talking about the cons. The cons here is there's no rental income while still undeveloped. There's no way you can make money passively when the plot is still undeveloped. Liquidity. It depends on the location of the plot that actually determines the liquidity of the actual plot. Another one here is infrastructure timing. The only way you can get more premium is when development and infrastructure move into the particular location. Location selection is critical. This is where the fundamentals of investing comes in. Without understanding the particular location, you might be losing out on a lot on the long run. And this brings us to the comparison between buying a plot and an apartment. On this side here, you have the land ownership. When buying a plot, you own the land. When buying an apartment, it is limited or it is shared. When it comes to rental income, you can only get rental income when the plot is developed or you utilize it for farming. But when it comes for apartments, rental income, you can make rental income passively. Design flexibility. When it comes to plot, you can design what you want. It is fully bespoke. When it comes to apartments, there's a limit to what you can do. Mostly, it's the developer that decides. The maintenance here for the plot is generally lower because it's vacant. When it comes to apartment, you have to pay the service charges. Entry liquidity when buying a plot actually varies. It varies on the location. For apartments as well, it also varies. Now, the development upside, when buying a plot, you can develop as you want. You can decide what you want to build and how you want to build it. When it comes to an apartment, it is fully limited. You can perhaps, in some apartments, maybe you can get NOCs to extend, but generally it is limited. There's no way we can talk about investing in plots without talking about the metrics or the factors to consider when buying a plot. Here are a few factors to consider when buying a plot. One is the location. You have to understand the location. There's no way you can invest in plots without understanding the location. Two is the land use. You need to know if the plot is residential, commercial, or industrial. Three is infrastructure and the development. Now, understanding the development coming in within the community and close to the community in terms of proximity is also very important, because that's going to decide how much premium you can make on the long run or how risky the investment is going to be for you. The fourth here is economic factors and market demand. To be able to ascertain your liquidity, you need to understand the macroeconomics of what is driving demand to the location. The fifth factor here is the plot location within a community or a master plan. So understanding where your plot is located within a master plan is also very important. Is your plot closer to an amenity, or is it a corner plot, middle plot, a single row, or a back-to-back? That's very important as well. Lastly, the feature and the plot sizes. Sometimes in a particular community, there might be more demand for a smaller plot. On the other hand, there might be less demand for a bigger plot. So you need to understand all of these major things to be able to decide if this is a good investment or a risky one. In addition, I would always suggest work with someone who understands the location so that you are well guided to make informed decisions. Now, in this segment, we'll be talking about the numbers. Over here, we need to look at the terminologies that makes it easy for you to be able to understand plot investing. To begin with, we're looking at the PSF, which is the price per square foot. The price per square foot just means what am I paying? For example, to calculate it, you have to divide the plot price by the plot size. So for instance, we're looking at a plot price of 3 million dirhams and a plot size of 10,000 square foot. You have to divide the price divided by the size. So on this particular plot of 3 million dirhams, you're paying 300 dirhams per square foot. Secondly, here, we'll be talking about the entry price. For the entry price, it just means how much do I have to commit to be able to get this asset. We're talking about a plot price of 3 million dirhams. The entry cost might be 10% or perhaps full cash. Now, you need to understand that in this market, mostly when buying a plot, it's full cash. However, there's some developers that might offer you a little bit of payment plan or a structure here and there for you to be able to buy a plot. The entry price may also include the DLD fees, which is the transaction fees that goes to the government, the brokerage commissions, and also some miscellaneous transaction charges. Another cost here is the development cost. Development cost just means what it will cost for you to turn the land itself to an asset. Over here, we're talking about the price of a plot of 3 million dirhams. Now, your construction cost, which will be per square foot as well, will be around 4 million dirhams. There's some approvals, some miscellaneous costs as well, around 500,000 dirhams. Now, your total cost, including the plot itself, is going to cost you 7.5 million dirhams. Now, this is what it would cost for you to turn the land, which is the bare land, to an asset, which is the project itself. Now, the total cost for this will cost around 7.5 million dirham. The end value just means what will the finished asset, by the time you construct the entire project, how much can it be worth? We're just giving an estimate, by the way. We're looking at 10 million dirhams. When we subtract 7.5 million from 10 million dirhams, which is the total project cost, from the estimated market value, you're getting 2.5 million dirhams. It all depends on the location, the specifications, supply, the demand. It all depends. Now, we're just giving an average on this side. We have to talk about the equity. Looking at equity just means how much of my own money is at risk. The total project cost was 7.5 million dirhams. If you decide to utilize bank finance for construction, the bank will cover 4 million dirhams for you. Your total equity in this would be 3.5 million dirhams. 3.5 million dirhams is what you're taking from your pocket. Here's the most important part of this. You're controlling a 7.5 million asset with just 3.5 million of your own capital. That's huge leverage. Talking about the return on equity, for you to ascertain your return on equity, you just have to divide your profit by the total amount of money you invested in terms of capital. Now, for example, we're looking at the end value, which is the end value of the project at 10 million dirhams. The total cost was just 7.5 million dirhams. Now, your profit on this would definitely be 2.5 million. Now, your equity in this, your main capital on this was 3.5 million dirhams. By the time you divide the profits by your equity, you will be getting around 71.4% return on equity, which brings me to the last one, which is exit. Now, you have to understand your exit strategy. Your exit strategy just means, how do I actually realize this value? We talked about the end value. For instance, the end value of the previous slide was 10 million dirhams. Now, how do you actualize that end value? There are several options to be able to get this value. One is sell the plot. You buy the plot at 3 million dirhams and you sell when the market appreciates. Two is you build and you sell, which means you're actually developing, then you sell on the long run. The third one here is to build and you hold, which means you can build and hold for passive income. So the last option here you can utilize is you build, you refinance, and you retain. These are four options to utilize to get your exit value. This is a comparative market analysis. This is actually taken from Dubai Real Estate Analytics. Starting price of Arabian Hills, as at February 2002, the actual starting prices were 116 dirhams per square foot. Looking at the current market, as of 2025 to 2026, the average price per square foot is 4,735. This is just for Arabian Hills, which is one of the most premium communities. Now, I understand. You might be thinking, okay, why am I using this as a case study? I have another beautiful community here, which is Nad Al Shiba. As of 2005, when Nad Al Shiba was launched, the average price per square foot was 135 dirhams per square foot. Looking at 2025 to 2026, the average price per square foot in Nad Al Shiba is now 1,134 dirhams per square foot, which means over the years, the community and the land and the plot itself has increased exponentially. Let's run the numbers based on this community, which is called Arabian Hills Estate. The concept here is you buy the plot and you get to build what you want. Looking at the size of the plot, we're looking at 15,000 square foot. The entry prices here is between 120 to 140 dirhams per square foot. So the average entry price, we're looking at 1.7 million dirhams. Now, the development cost here, we're taking an average of 450 dirhams per square foot, which means to develop a villa in this community will cost you around 2.7 million dirhams, which is the industry average. We're taking a miscellaneous cost of 500,000 as well, which brings the total cost to 5.1 million dirhams. You bought your plot at 1.7, you built it with 2.7. In total, you spent 5.1 million dirhams, including the miscellaneous cost. The end value of such villas around the community, for instance, looking in the valley, the average cost for a similar villa would cost between 7.5 million to 9.5 million. Now I'm taking an average of 8.5 million. Equity here, which means the capital being utilized to buy the plot, was only 1.7 million. By the time you exit and sell the villa, you're getting around 3.4 million in profit. Now your return on equity on buying this plot, building and selling on the long run is 200%. For you to get this exit value, we're looking at either selling the plot, building and selling, building and holding, or building and refinancing. It all depends on your investment strategy on the long run. Lastly, I have created a Dubai real estate guide for investors who are looking at taking advantage of the market, getting in at the right time, and getting the maximum exit value at the right time as well. If you're interested in getting the blueprints, I'll keep the link in the description. This brings me to the end of this presentation. I hope I've been able to show you one of the most underrated investments in Dubai. If you have any questions, kindly drop it in the comments. I'll be in the comment section responding. Kindly like, share, and subscribe. I remain Damalala, signing out.